I don't know if you can have a sense for how far it may go, because I don't think probably the market bottoms until daily new cases peak, and that's the uncertainty, right? Like, who knows what the virus is going to do? I've heard a lot of medical experts who don't have an idea, it seems like. And so I guess the three things that I would focus on are that times like these are not the time to sell stocks. There is a lot of uncertainty, but history would show you that when you panic, when others panic, your intermediate to longer term returns are subpar. The VIX hit 59 this morning. If you go back in history, there are only 30 times I believe the VIX has closed above that, and each of them have given way to positive one-year returns.
Gonna need to sanitize up for this video. Today, ladies, gentlemen, this is going to be one of the hardest moments for cost average investors, dividend investors, and people that are just trying to get to retirement, being told don't sell your stocks, watching them decline day after day after day, with the S&P sitting at this very moment down 24.9% with a PE ratio of 17. There's nothing saying we can't continue to see a further decline. And this is especially hard considering a lot of us have been advising keep buying. Things are cheap, and we'd be buying stocks a day ago, a week ago, even maybe a month ago, and we're just continually seeing all of these gains get evaporated, and our cash stockpile is probably evaporating as well. And in this video, what I would like to do is try and explain to you how long I think this virus is going to last, how long is going to impact the market, and when we might expect a turnaround. But I went ahead today and we already started purchasing stocks for my girlfriend. We picked up Canadian Imperial Bank, paying an 8% dividend yield. I went ahead and picked up some Bank of Nova Scotia. We had to get some exposure to those techs, so we bought some Facebook stock today. Went ahead and picked up a little bit of Apple, though it'd be nice to see Apple take a further decline, because these stocks are still holding up quite nicely, because again, that would have to do with the cash on hand. These companies will never go anywhere. And we also picked up a little bit of Ryokan, and the REITs right now are acting like it is an '08 financial crisis. Taking a look at Ryokan, down 45%. We didn't buy O Realty Income, but I just wanted to throw it up here as an example because it is down 51%. Absolutely unbelievable, with a 7% dividend yield. So at these moments in times when I'm purchasing stocks for people like my girlfriends and my parents, it's a constant reminder to them that there's an extreme amount of uncertainty in the market, and a lot of volatility is going to follow until people know when this is going to slow down. So at this point in time, I want to explain to you some of my theses and my predictions. Though I'm not a financial advisor, it's just going to be fun to come back to this video in the future. But I look so forward to breaking this down for you. So let's hop right into this.
Drop it.
Welcome back, my passive income investors alike, to this crazy black swan event. And we finally have some hints of good news getting completely buried on quarantine as we all sit in our house. I can't get a haircut because nobody's open, and I'm not shaving either, because what's the point at this time? I might as well act like a bum living at home with my parents here. But taking a look, China reports fewest number of virus cases since it started tracking the disease in January, which is really awesome. That's the first little tidbit of good news. So we just don't know the severity of how this is going to turn out. And there's a very specific reason all the governments went ahead and locked down every country and border. And it is purely for the reasons of the compound effect. Valuetainment did an incredible job at explaining why all these politicians and diplomats are taking the precautions that they're taking to avoid major financial and economic issues. So I wanted to take a listen to this because he did the best job explaining it.
So how bad is this double effect? This is the way I did the math. I took it, if the number of cases doubled every 4 days, 6 days, 10 days, how bad could it be in America? This is what it looks like. On February 4th, we had 11 cases in U.S. On February 11th, we had 14. On February 25th, we had 59. February 25th is only 3 weeks prior today. We had 29, we had 50, now we're at 3802 today, right? Now watch this. March 3rd, 125. From March 3rd to March 10th, it goes to 1,004, which is 8 times. Then it goes to March 16, 3802. So I said, let's double these cases every 4 days, every 6 days, every 10 days. Let's see what it looks like. If you double the 4,000 cases every 4 days, March 20th, we're at 8,000. By April 17th, we'll crack 1 million. By May 2nd, we're at 16 million. By May 22nd, everyone in America has coronavirus, right? Now, here's just something to be thinking about. If this grows this way, if it's every 6 days, is by June 30th, everyone in America has virus. And if it's every 10 days, it's 9/14. Everyone in America is going to have a virus.
At this point in time with this information, until we see the number of cases start coming down, which if everybody listens to scientists, listens to the government, this should dissipate over the next couple months. And honestly, after we see the first quarterly earnings come out for most of these companies, I really don't think stocks are going to be impacted to the effect of them seeing a 50% decline in their equity value. So, I mean, they could easily do a 20% pop so long as these things pass and we get some certainty. But the markets will not balance out until we know what is going on in those bottom line balance sheets. So with those cash flows being depreciated, you're probably getting a lot more concerned considering everything just keeps dropping and dropping and dropping. So what are you going to do from here? Well, you got to kind of relax. Like I keep saying, guys, people are getting so caught up and we see the two sides of the stick of people that are completely fearful, selling out of their positions. And then we're getting the people on the other side that are way too fruitful about all of this and they're just loading the boat on everything, only seeing their capital gains completely evaporate. So if you are a stockholder, so long as you're holding those premium stocks and you have a long enough time horizon ahead of you, you're going to be capturing one of the greatest moments in stock market history and you're probably going to make a lot of money. But come back to me 2 years from now and we can talk about this. This will be a fun video to come and look back on. If you have short-term temptation and not a long enough time horizon, a lot of people think they're going to throw a lot of capital from, out this cheap interest debt, throwing it at the market and making a quick rebound. I don't think that is going to be the case here because we don't understand the future, guys. The market's like certainty, but there's no real certainty in life whatsoever. The combination of oil right now, along with this virus, is causing this stir effect, but at the same time, we don't know if something else doesn't come out of the sidelines and hits us after this recovers. We don't know what could come into play, and we could see some other black swan event happen in the same year. And even though that is extremely unlikely, it is a reality you have to face when you're buying equities. Now, in my perspective, I am buying stocks to hold on for the rest of my bloody life. So at these points, it's not going to affect me that much. Obviously, I'm having some cash flow issues with my job, but that doesn't mean that, I don't have any debts. I never over leveraged myself. My cash flows are depleted, but at least I have dividends that I can constantly reinvest into all of this. And it's trying to get the point across to people too that are investing right now that yes, you are getting an incredible discount, but that doesn't mean things don't get worse. But please have the stability of thinking a 3 to 5 year term minimum, if not a lifetime term. And you're going to thank me in a couple years if you are relaxed and have a long enough time horizon. I promise you do not want to miss out on this opportunity. It's just going to be really shaking the weak hands out and the day traders and the gamblers. But us long-term equity holders that are looking to fast track our retirements, this is the opportunity to take advantage of that. So that is why I'm investing for my girlfriend and my mom and continuing to invest through these volatile times. And at this point in time, we're going to take a listen to some of the biggest investors out there, people like Mark Cuban, people like Kevin O'Leary, just to see what they're doing with their money. And I'd love to know in that comment section below, what are you guys doing with your money? Are you still investing? Is your cash flows drying up? I'd love to hear from you. And also slap a like. It helps these videos keep going and ensures that I'm going to be able to eat this month. But let's take a listen to some of these big investors.
And I don't know how to time the market.
What are you doing with equities?
So all I've done with equities is go to higher quality balance sheets, getting a 2.2, 2.3% div yield, which is way better than the 10 years giving me. I don't have duration risk. I'm very concerned about
that
debt.
puts you in like financials, which are very
No, I don't have
here.
any financials.
No?
I've focused on consumer, industrials. Tech has been well rewarding, the ones that do provide dividends. And I've started to put some money out in Europe because the PE ratios are 20, 30% lower.
Yeah.
I don't know, there's no growth
Maybe
there.
for a reason.
Yeah, I get it. But still, I'm getting a 3.2% div yield on my European portfolio. So I'm not complaining about that. And so my big problem now is I have a lot of cash to put to work. And I know this is a problem for every investor because normally you would blend it between credits, bonds, and equities.
Yeah.
I am not comfortable putting
nowhere
money
to go.
work.
So the question for the last, 4 years has been, sure, you could sell, but then what are you going to do? You're going to sit on cash. Are you going to sit on cash here?
Well, I had a big liquidity event because real estate assets became more than 20% of the book, and we had to sell it back down to 20%. Cap rates are at historic highs.
Right.
And so that was back in October, and now we have to try and figure out where to deploy the capital.
Just tell us just what you're thinking about as a longtime market watcher and participant, and then we'll get to the other side of your life in just a moment.
I'm just as concerned and confused and uncertain as everybody else. I'm a long-term bull in terms of our country, and, at some point the markets will be higher. I just don't know when. I dipped my toe in. I bought some Live Nation. I thought it took too big a hit, but I bought it 2 days ago, so I'm underwater there. But like I said, I'm a long-term holder there. I bought some Twitter today. I'm a long-term holder there. I have, I own shares going into this decline. So, I don't know what's going to happen or when, but I think long-term we'll be okay.
So you went through the dot-com bust.
Right.
You came out good on the other side. We all know
Right.
that. You went through 08, which people say this bears no resemblance to,
None.
and now we're
I
going.
mean, in 08, I killed it. I mean, literally, I was stupid. I bought, at one point, I owned almost 5% of CBS and a couple other companies, and I sold too soon. That was the deleveraging that kind of explained everything. In this particular case, you have oil. We have uncertainty in terms of what the overall impact of the economy is going to be. We went up so fast, like you said. We haven't even got to the December 2018 lows. So anybody who truly has been a buy and hold person, you feel the pain.
What a crazy time we live in. Please stay diligent, stay relaxed, and best of all, stay frugal. I look so forward to chatting to you tomorrow.